Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, I was trying to get here on time and everything, and it just was not working out today. Hey, we got retail sales here today. Actual retail sales, month over month, we were expecting a reading of 0, headline at least 0, and we got spot 1. Core, let's see here. Core retail sales, we were expecting spot 3, and we got spot 1. Philly Fed Business Index, negative 4 versus 11. New York Fed Manufacturing, negative 9.2 versus negative 8. Initial jobless claims, 229 versus 227. And then, of course, PPI. Where's the headline number here? U.S. core PPI. Oh my. U.S. core PPI month over month and negative spot 4 versus spot 3. But we are getting what we got last time, which is they buy on the initial news and then it gets smacked down. So there does appear to be quite a bit of selling here. So yesterday, Zero Hedge was kind of like, well, what's with this? And Bloomberg's Elise Andres suggests 10 reasons why bonds are in such a bearish mood. A surprise rise in rates forced mortgage bankers to create home loans Wednesday in a follow-through from about $3 billion in origination Tuesday. That supply weighed on treasuries as the deals were packaged and sold. Mortgage-backed securities completed with another heavy day of investment-grade corporate bond supply. Hedging and rate lock flows linked to another 8 deals coming to market aided the rise in yields. As cash underperformed futures, profit-taking on basis trades also lent to higher yields, with investors selling cash bonds versus buying futures. Bearish option flow also weighed on treasuries as investors weighed on a 4.8% rate on 10 years, about 30 basis points above the current rate. SOFR investors are also betting on backloading of pricing or Fed rate cuts into 2026. The inflation outlook also dampens bond prices after April's CPI report showed brisk inflation in consumer categories. Thursday's April PPI data is likely to offer fresh hints of tariffs pass-through to producer commodity prices. Okay, that is what we just saw. Thursday's April PPI data is likely to offer fresh hints of tariff pass-through to producer commodity prices. And what we found was that the producers are not really seeing inflation at all. They are actually seeing deflation, and they are, making money from it, essentially. They continue to charge you in line with inflation, but their costs are actually going down. That's keeping the Federal Reserve on hold, and that refrain from rate cuts weighs on bond prices. As such, investors continue to sell U.S. assets, including bonds, and the dollar investors also soured on bonds amid concerns about how Trump's tax plan, while gaining momentum, will be paid for. That means recent longs are underwater at a time when strong-handed systematic short sellers add positions. This combination suggests our yields may have room to run. Yeah, just joined S&P 500 higher. So essentially what we are seeing is inflation, at least this month, not as much of a concern as we thought, is the simplest way of putting it. The tariffs led to deflation, essentially, which, by the way, is exactly what I've kind of been saying would happen. I'm not going to say that it's going to stay that way. I think that you're going to see a lot of volatility in this number, so it wouldn't surprise me to see a higher than expected inflation report next month. But it's probably going to go back and forth, and in the end, it's not going to be as large as people were anticipating. Well, we can come into the actual report here and see which kind of ones really really changed. Total final demand down 0.5, energy down 0.4. Less foods and energy is 0.4. So it was food and energy that was kind of really the origin. Nothing in the actual report really stands out to me, but well, so again, there was a big spike on the news, both in the S&P 500 futures and the Treasury futures. The Treasury futures got cut back down pretty quickly, but then have since then risen a little bit. So there is maybe some signs that this news was enough to maybe break the will of some of the shorts, although some of the shorts are systematic and or, passive flows. So it may still be difficult for, this news to really bust it to the upside. There's always that chance. I mean, if they get far enough, then, it could just cascade, because we are in that kind of a situation. But, right now, if you look at the micro 10-year, like, we're right at 4.5. So, all right. Well, I have not eaten, so I'm going to eat. I'll turn the camera off. We'll see where this goes. Well, we're getting Powell's comments, and I'm not seeing a reaction to this, but it seems like some of the things that he said seem significant, like that they need to reassess things. What are you eating? Just eggs and oatmeal? Okay, so now I can read you Powell's comments here. The Fed is undertaking a 2-day review of revisions to its framework adopted in 2020. Zero lower bound is still a risk and should be addressed in the framework, though it is no longer a base case given the current level of policy rates. Revisions to Fed communications are also being considered. The idea of a moderate overshoot of inflation following weakness became irrelevant given the levels inflation reached. Certain aspects of the Fed's approach are permanent, such as the focus on inflation expectations. We may be entering a period of more frequent supply shocks, which, in my opinion, would kind of suggest deflation. I just want to note here, we are back to the buyer's cost basis. Also, there is a gentle rise in the yield curve, a little bit of steepening here. So if this was some sort of pullback and then come back to the buyer's position and like rebalance to go higher sort of a thing, I think that they would have come back to here and bounced. And they didn't. They failed that. There does appear to be some support at the seller's cost basis. So this kind of says to me, it's not like a counter trade. So like, you know, if I really wanted to sell it hard, I'd wait for them to buy it up and then come in and smack it down. That doesn't look like that's what this is. That this looks more like the longs all took profits. There are passive sellers out here. So that kind of favors shorts, but it's probably not going to be crazy shorts. It's probably going to be from here. Well, they could bounce. They could hard bounce here, but if it continues to buy, it could be like, you know, it could be the decline of it is a little bit more gentle after this. But I'm not seeing the sort of thing that I would like to see where it's like, you know, really, really strong trend coming in. The flows kind of look like that news was definitely important and kind of shifted things around a little bit, but that there are some passive flows that are more important. Yeah, I wasn't paying attention very well there, but Uzi pointing out sellers having a rough go of it at the lows in CB and CN. It really looks to me like, I wouldn't say absorption, but like the sellers didn't really take it. They kind of took a break at the seller's cost basis around 22.5. And when they let go of the gas pedal, it rose back really, really quickly. It didn't take very much volume to do it either. About 6,000 contracts to go all the way back up to there is kind of a little unsettling. Road asks, what is the news? So we had a big slew of news, including retail sales, PPI, and unemployment. So unemployment claims was pretty close to what we were expecting. Retail sales Some sections of it were slightly higher than anticipated, but overall I would say it was a disappointing report slightly. But PPI was the big one, with the core PPI being much worse than anticipated. So just remember, this is a number that is typically spot 2 or spot 3 month over month, and a 0.1% miss is considered significant. We got negative 0.4, so we were off by 0.7%. That's massive, and that is a massive shift to people's expectations, because a lot of people were saying, well, okay, we didn't really see consumer price inflation, but maybe that's because the producers are eating the costs. Not the case at all. The producers were actually seeing deflation. We actually saw a negative number. So yeah. So oil is just hopping there off of report that Iran has not received a new fresh proposal from the U.S. Donald Trump negotiating with Iran, trying to make a nuclear deal, which could bring more oil on the market. So that's why I think we're seeing oil kind of on the decline today. Oil is jumping pretty hard off of that. I don't know if that's related to why the treasuries jumped up here, but I will be right back. what's happened for oil? I know, did you say that before just before I said it? We'll say again, oil is moving off of headlines that Iran has said they haven't received a new proposal from the Trump administration for an Iran nuclear deal. Okay, so why are the treasuries moving down, or were moving down yesterday? Zero Hedge points out Bloomberg's Elise Andreas. I quoted this earlier at the beginning of the stream, but I'll do it again because I think it's very important. A surprise move in yields forced mortgage bankers to create home loans Wednesday in follow-through from about $3 billion in origination Tuesday. That supply weighed on treasuries as the deals were packaged and sold. Mortgage-backed securities completed with another heavy day of investment-grade corporate bond supply, hedging, and rate lock flows linked to another 8 deals coming to the market, aided the rise in yields. As cash underperformed futures, profit-taking on basis trades also lent to higher yields, with investors selling cash bonds versus buying futures. Bearish option flow also weighed on treasuries as investors wagered on a 4.8% rate on 10s, about 30 basis points above the current rate. So for investors are also betting on a backloading of pricing for Fed rate cuts into 2026. Inflation outlook also dampens bond prices after April's CPI report showed brisk inflation in consumer categories, although that one shifted because PPI was really, really weak. Thursday's April PPI data is likely to offer blah, blah, blah. That's keeping the Federal Reserve on hold, and that refrain from rate cuts weighs on bond prices. As such, investors continue to sell U.S. assets, including bonds and the dollar. Investors also soured on bonds amid concerns about how Trump's tax plan, while gaining momentum, will be paid for. Okay, so we're getting a bunch of passive selling flows yesterday, but this PPI news does kind of shift things a little bit. So I do think we are in a possible situation. I did not expect them to come back up this high, but I do think that that's a good thing. I think that if we could get above 110, that you might see some trapped traders and some longer time frame people kind of following the momentum and so forth get trapped. Could be a situation where things snap back really, really quickly. But for now, well, okay, that was a big buy there. Jamie Dimon says some are holding back on investments due to uncertainty. That's certainly a thing that we're seeing. So I at 4.5, I was liking it, and it moved without me. At 110, I think that we get a little bit of a stop there, but I don't necessarily want to take a trade after that. Well, they sure stepped up there at 111 pretty well. I mean, look at that. Oh.
Block buy.
So again, after such a large round number, there's likely to be some stops. So I think some trap traders, although we're like well beyond the whole trap traders thing now, right? This is something else. Man, it sucks because I was like right there on it, but I was not quite fast enough. I kind of realized what was happening a bit too late. Because it was at 4.5, and then I was like, well, maybe I can get like 497, and that didn't get filled in. It just ran away from me. That did very much look like a stop run to me. So we're probably going to get a short-term pullback here now that flow has subsided. We'll see if they kind of find a ledge here. News in 5. Oh, what do we get? Oh, industrial production. Not a huge piece of news, but okay, so there was a pretty decent iceberg there at L1. They did crack that briefly. That also did put it as the point of control for that range. I'm not seeing a decrease and like resting liquidity here or a sign that like the latent liquidity is less at this location. So we're getting some signs, but not all of the signs that it may decide to rest at L1. I didn't see this tweet from Elon Musk. It is increasingly likely that AI will superset the intelligence of any single human by the end of 2025 and maybe all humans by 2027, 2028. Probability that AI exceeds the intelligence of all humans combined by 2030 is 100%. I disagree. Accuracy. Accuracy is a part of intelligence. The accuracy on artificial intelligence is still not there. Okay, is that a new high? It is. It is a new high. Wow. That might mean that they really want it, though, yeah? Super sad. I'm super sad that I missed that trade. Do you think I could still be holding it? Make 20 bucks? Would I be going for more? I think that I would be keeping a close eye on it at the very least, but maybe it would have taken the profits at $20. So if I would have taken the profit at $20, that kind of says to me that there is an increased probability of it kind of getting stuck here, despite that push to a new high. Ergo, I don't think I want to pick up a new position. Certainly not over here in the micros. In the 10-year treasury futures, because I have such a good spot in line at 31.5, I might be able to sort something out with that. But I'm honestly kind of thinking about canceling that as well. In fact, I think it will, because the problem is, what if, you know, some news came out that just swept down, and I don't want to get that filled. So I think I will just cancel everything and go over into the corner and cry for missing a good trade. So I did take one trade, and it was a scratch earlier in the week. And then here was a trade where I think I should have taken a trade, and I was just a little bit too slow on the draw. But you know what? I did not get ready quickly enough today. I think that was the real mistake that I made here, is I wasn't like here to just be like keyed in. Granted, I don't think that there's any way I would have gotten into a trade like this, or I shouldn't have gotten into a trade like this before 28-ish at least. Because probably what could have happened is I thought, oh, it should definitely go up. And then, you know, get washed out before it actually goes, right? That's kind of how my feelings on things progressed. So I remember earlier when I said we're down to the bottom, if it continues to sell, I don't think that it will be as extreme. And I'm not sure if there's enough to make it to come all the way back. Then when Uzi noticed that the sellers were having a tough time of it at the lows. Okay, it came back up. I noted that. I wasn't like super chomping at the bit to do something at that point, though. It wasn't until right at 4.5 that I was kind of like, oh, okay, wait a second. So is it the case that, yes, maybe there are, or at least there were, a lot of passive flows pushing the treasuries down? That there are also some passive flows preventing the 10-year treasury from getting above 4.5%? That was another new high. Wow. Yeah, has it been 35 ticks? No, it hasn't been 35 ticks. Let's see here. It was 7, 10, 20 ticks. 24 ticks. That's still really good. So the thing that, one of the things that I think made it more difficult for me was, you know, I'm looking at this cost basis, and it's so frequent that these like provide support like to the tick. But you don't know if it's going to be this one or if it's going to be this one. And in this case, it was the lower one, but then they went well beyond it first. So I did not see that. That's why I was saying, like, okay. And was there something in the order flow? I mean, there wasn't like, in this situation, I would be looking for like strong responsive buyers coming in and really pushing against it. And I don't think that we saw that. I think what we kind of saw was, okay, big initial jump. Things slowly come back down. And, you know, there is a bit of selling here at this point, like right in here. Then that selling sputtered out. And we rose back really, really quickly. So it wasn't until around here that I started to see something, right? And that is right about where I tried to take a trade. And I was just a little bit too slow. I should have been like, once we passed back above the buyer's cost basis right here is probably when I should have started looking. I could have said, if it gets to 4.5, then I'll hit into it. That's probably the way that I could have or should have played it. You know, and I don't know if we could play it like that every time, but I think it's still useful to kind of go through that, kind of gaming it out and saying what's going on. Now, another thing though is it's usually really hard for us to stay above that cost basis right there, and they are like way above that. Right? So I think that we also have to admit that this is a freak move. This is a freak move. It was probably under normal circumstances would have stopped at 110, but because it was a round number and the dynamics that happen around numbers like that and everything, you got really big short covering after that. And these further moves, I think, are just kind of like other people that had kind of hung on, kind of puking. But I'm noticing that the volume since then hasn't been very consistent. So I'm a little bit weary about like buying it here, expecting it to continue to trend. But maybe let's go back. Just because I'm not really seeing the signs that like there's a large meta order is going to be another leg. Okay. What I kind of see more instead of is, you know, kind of like small little imbalances kind of reaching a breaking point. And that might have been all there was. And that was, we already saw the most exciting stuff. Okay. But, oh, we have a rollover notification. I didn't go through the charts earlier, so let's kind of look at the charts and see where we're at. Huh? Maybe we'll see something in there. So here we are in the treasuries. You can see like the initial news wasn't so great, but now about an hour later, we're seeing a pretty good spike. But you know, we were down pretty considerably yesterday. Really, the past, I mean, it's been just a lot of selling in the treasuries. Could this be a turnaround? I think that is the sort of thing that we start to see where it like really turns, right? Yes, was pretty mild yesterday and down a little bit overnight. So oil was down because of reports that they were getting close to a nuclear deal with Iran, and if Iranian oil came out on the market, because Iran could make a lot of oil, okay? If Iranian oil was on the market, that would be a big deal. That could really bring gas prices down. But then this morning we had a headline that they haven't received a new proposal yet, and kind of dampening optimism on that. So, which is why we're seeing the oil prices kind of surge back up here. Gold and silver kind of doing a similar story to the treasuries, just kind of like selling every day this week, and possible reversal here. Silver's similar issue. Copper's similar as well. But again, copper's just kind of been in this range. Japanese yen, interestingly enough, on the upside. So it's kind of unusual that we've had the Japanese yen for like what? Today, and then 1, 2, 3 sessions before that. Well, I guess just the day before. So let's just say yesterday that the Japanese yen was up, but the treasuries were not. A little bit unusual. Is something changed in the Japanese yen? Like, was it the Japanese that were selling the treasuries so hard, or maybe perhaps continued to sell treasuries? Well, they said, you know, they could use treasuries in negotiations, but then they're like, but we're not actually going to do that. Okay, then why'd you bring it up? Kind of fishy. Kind of fishy. Bitcoin dropping back down to 102,000. Okay, so back in the treasuries, we're not getting to, like, if we could get above yesterday's high, that would be pretty significant. And I would say that that is certainly within the realm of possibilities, given how hard this has kind of been hitting back. But that's still quite a ways away. I think that that's a little bit too much for me to expect to happen right now. But that would be the dream, right? If we were long, would be to get to 09. But as Uzi is pointing out here, it's getting hard for buyers in ZB. I'm not going to say so we should try and how do I'm noticing that a lot of the time what I get from you guys is like there's not necessarily anything explicitly wrong with what you're saying. Like, it is true it's getting hard for buyers in ZB. But I wouldn't say it that way because I don't think that it emphasizes the things that are going to matter and help people the most, you know? So it's kind of like I'm trying to build a model in my mind of how does, you know, orders affect the market and things like that. And so we want to have language that reflects that, right? So I wouldn't say that it's getting hard for buyers, because that would say to me that I'm seeing a lot of buying in ZB and they're just not going anywhere with it, right? But what I am seeing is that the buying in ZB has really trailed off, has really fizzled out. What do you think that is maybe a more accurate description? Certainly is the case that the point of control is at 112.20. But like what happened was there was like a ton of volume there, and now the activity has really died out. Then you take some trade sensation. Well, I tried, Uzi. I did place an order. And it was like 2 ticks away and they didn't come back for it. I should have been way more aggressive with that. Really should have. Okay, so now you're saying something that maybe I'm not seeing. You're saying the buying has trailed off, but there's still buying up there and they're not getting anything out of it at the moment. That's a little bit different. Well, that move right there, they just kind of jumped up on like practically nothing. So that one I'm actually a little bit suspicious about. And it did not correlate with anything either. Maybe it correlated with the dollar. So, like, because we had to jump up there and everything, I want to watch now What do these offers do? When they like clear an offer, how willing are they to put another offer on top of it? Or is it that the offers start to get a little bit skittish? So right there, they just traded a few 500 contracts or so, and then the offer stacked a little bit. Okay, we down ticked. How long does it take for this offer to firm up? Well, they're able to get over 500. Okay. And then it's over 2,000. So what I'm seeing here is actually the low latent liquidity situation is what's there. I wouldn't say that the sellers are like unusually anxious to take the fills and everything, but there is low latent liquidity. So we were right to be suspicious of that little jump there. I'm actually starting to wonder if the 30-year might actually go outright sell, because we are getting like steepening. So if we're getting steepening, I would expect to see the ZB sell harder. But right now, that's not what you're seeing. Right now, you got this thing. Oh my gosh, my pen is kind of having issues here. Hold on. Seems to me that Epic Pen has some sort of a memory leak in it now. Because, like, if I've had it open for a day or two, it like becomes unresponsive. Okay, I'm seeing flattening there. I'm not really seeing it in the overall spread so much, because it's only like 2 ticks, but it is there. So if they were to straighten that back out and CB caught up, you would have to see outright selling in CB. But 112.18 is just the lower end of that range in CB. Shall we recenter? Wow. The news squawk is telling me that Walmart shares have fallen 4.9%. That's pretty crazy. From the New Yorker, the 3 faces of American capitalism. Warren Buffett, Elon Musk, and Donald Trump. Ugh. You know, if there is anybody out there that I would like to be like the face of American capitalism, it would be Warren Buffett. I don't think that Warren Buffett, he doesn't use the same language that we use, but Warren Buffett certainly seems to understand that a lot of corporations and listed stocks make very poor decisions because of the feedback that they're getting back from the markets. And Warren Buffett has developed a method in a way of investing that basically sidesteps all of that. So I think that if he doesn't understand it explicitly by the math, I think that he would be very open and responsive to it, right? I kind of like the framework that I've developed here on my channel and the way of talking and thinking about it, simply because I think that it kind of points us towards solutions a little bit more, right? Things don't turn out the way that we think that they might because of complexity. And we're going to have to look at the decisions that we're making, because the decisions that individual people make matter. And I think that the answer is right now is you can't just do what you think the market is going to do. If everybody does that, it doesn't turn out well. If everybody was just a value investor like Warren Buffett, would that be better? Well, probably not. But that's maybe something we would have to model, right? Elon Musk, on the other side, I think his thing is just taking big risks. I think the issue I'm kind of a little bit weary about Elon Musk. And I think the reason why I'm wary of him is because it seemed like for a time that he was very, very liberal, and now he has become very conservative, or at the very least anti-woke. And yet it doesn't seem to me that any of that change has reduced his appetite for coming in and trying to make massive changes to society without actually looking at the impact and really working out the complexity of it all. He's making the same mistakes that liberals do, like, oh, here's this system, I don't like it. I bet you that if we make this one change that it would fix things. So let's just go and do that. And they don't think about any of the potential consequences or trying to model it out or anything like that. They just jump into it, trying to completely rework society. So for that reason, I'm not gonna say I'm like a huge Elon Musk fan. Well, I'm actually seeing a little bit of an increase in buying in ZB now. And the 10-year has kind of shown a gentle upward slope as well. So the 10-year is kind of showing me like that it is in a liquidity hole, and that somebody is executing and buying in the liquidity hole. So that's a flow that's likely to be persistent and could possibly give us another leg. I think that if I had more time, it would maybe be worth it for me to try and pick a spy here, but I don't think that it's going to jump off before we get going. A new high would give some hope. Well, how do you feel about now that they're touching 25 again? Oh, 25 was a new high. Oh, okay. I was gonna say they weren't like really punching through it, so I'm not gonna say that it's like, oh, it's already decided that we're gonna have another leg up. Okay, and we actually came a clip down, but decent equal liquidity on both sides. Decent amount of buying there. I don't know. I don't know how I feel about it, just it being up there, but what I'm seeing in the flow so far kind of looks like a tepid long. I don't like the, let's see here. The others don't want to go, but ZB wants to take them. Well, is that because the yield curve is flattening though? Oh, it is still flattening a little bit. Yeah, it is still flattening a little bit. Wow, Foot Locker up 80% in pre-market on takeover news? Really? I remember seeing stuff about Foot Locker yesterday, so I'm surprised it's up 80%. I'm really just observing what's paying off and what isn't, and what's more likely to provoke a reaction. Well, there you go. I think what's, provoke a light reaction, I think that's the right kind of line of thinking, is like, I'm noticing how orders are responding to different things and gaming out a scenario where they might respond in a way that could continue to push us up or whatever. But I'm kind of weary of anything that's kind of like, well, prices moved like this and ergo that's likely to tell me something about the future, right? So like that maybe there was a few moves up, but then they didn't really continue through per se. I don't know if that necessarily tells me anything. Like I'm looking for the sign that there's a large meta order involved. And I would say that through most of that, we weren't getting that until the, like, if we come back to the chart and see here I was kind of like, meh. Here I was like, oh yeah. If I had more time, it would have been worth a trade. I'm very disappointed in myself today, guys. Like, if I had really been prepared, I am concerned that I might have taken some bad trades earlier on, but there was a good trade in there that I missed. Price moving is going to impact some degree of how the people will place orders. I mean, not everyone is out there like, yeah, I'm short 121.10 in ZB and I'm down 20 ticks and it's cool. Well, no, because my approach to that is that's just kind of looking at the little ripples in the ocean when there's a tsunami coming at you, right? Like the primary thing when I'm talking, I'm trying to sort out is there a large meta order that will create a strong trend lurking in the market? We see signs supporting that. The whole thing that's like, people are down 20 ticks and they're going to puke it. I kind of feel like we're past that point, don't you? Don't you feel like we're past that point now? I don't know. It's kind of like when ZB got through 16, I kind of feel like that was like the stop run, right? So it's going to impact people on the wrong side of it. Okay, so let me back up. I think that we did get some people short on this, and that when we crossed 110, even in ZN, that we were in Puke City at that point. That we were in Puke City. But I also think that Puke City happened and that's not really a factor anymore. Like this is higher highs in ZB. I don't think that those orders were, of course we don't know. Can't really know for sure, right? But I don't think that this subsequent push higher that trap traders is a significant portion of those orders. I think that this little push higher is another leg of meta order. Over here, we're looking for buying, not paying off anymore. But I honestly don't really look for that though. I look for aggressive selling. Right? So like if I have a big up move and then I kind of see it generate a liquidity hole. So that's the first thing. And a liquidity hole is not, I mean, I guess maybe you could describe liquidity hole as buying not paying off anymore. But buying paying off and not paying off anymore is just kind of the result, right? I want to predict that. So I'm looking for signs of low latent liquidity, right? But I'm also, when we get to that point, I'm keeping an eye out for aggressive responsive sellers. Somebody that's going to try and screw that whole move up, right? You can literally call any plus or minus 10k volume as whatever you want, really. Well, so it's all about, you know, we're looking at this pattern and then seeing what the cumulative delta is doing in response to it. So like, okay, let me draw out some scenarios. That's too big. Okay. This is what we got. And in this scenario, I would like to see cumulative delta go up, go sideways, go up again. Right? Or actually go up kind of less gently, go up. Right? This is what we got. So this kind of right here was the sign that maybe there was a large meta order that was going to continue through. Right? But it was looking at what the cumulative delta was doing in that kind of contextual area, right? Okay. There's this one. Right? And when I look at this in cumulative delta, I tend to see this. Right? Now another one would be like this. And we see aggressive buying all the way through it. That's kind of weird. That should typically not happen. Mm-hmm. Well, okay, so what if we got this? Okay, this would be like there was a big buy, nothing happened. Those guys gave up on the trade. Right? Then I think that I would see something like this. Or maybe I would see, okay, here was the big move up, and I actually did see some buying, but it didn't happen. You know? That's different. Right? That is not what we saw. What we saw was this, was they formed a liquidity hole. There was still somebody passively buying, but at a much, much greatly decreased pace. That's a good sign that there could be another leg. But that's very different from, okay, there, you know, we have formed a liquidity hole, and now I'm really seeing some strong buying, and they're just running into a wall. That's a different sort of a thing. Because when we come up, we came up, and then, you know, we're kind of forming a liquidity hole. So let's go back and see what actually, you know, kind of look at our chart here now. See what did the order flow actually do? Okay. So we can talk about this part later, but we had a large meta order. And then I think that we had another large meta order. Okay. So when we were here in this spot, this is where we were saying, it seems like buyers are having a hard time of it now. I think that what is commonly taught in order flow is people would say, oh, I should take it short here now. Right? But that's not what happened. What do I care about? I care that there's still a very, very gentle upward slope. Right? Like there's still buying. It's just at a much reduced pace. That's a good sign that they're still executing and that eventually they will make another push. Right? Have a whole bunch of selling dumps into the treasuries right now. It could make a significant portion of the buying banking on new highs say screw it. I'm not sure that's true, Izzy. I think that the number of people I think that the percentage of the market that cares about that is like 5%. Well, how much came out over here? Like when we did that, okay, like when we did make a new high. Let's just say I mean, we don't know for sure, but we can say this was -7, right? This is +7. And then this from here to here was 20. But he was 110 even. It was about 10K. So it was like 10 to get it there and then 10K puke. So I think, and I would say that was like a really big stop run, right? So just think of it like that, like 10K trapped buyers in the current market is like significant enough for a stop run. But like what percentage, what is that compared to like the big meta order that has to execute, I think that that's still a relatively small percent. So it's maybe not 5%, but I think that it's definitely less than 50%. I still think that figuring out what these passive players are going to do, or which side that they're on today, is more important. Okay, so if we have 10K to buy and a sudden mountain starts, well, okay, that's probably a bad example. Let's use more extreme numbers. Okay, if I think, because it's like end of month rebalancing or something like that, and there is like 60K net change in cumulative delta expected, and then I get up there and I see like 10K sell, hell yeah, I'm going to buy that. Hell yeah. Like I'm kind of in that situation, I'm kind of banking on everybody getting disappointed in the trade and giving up on it and yada yada yada, and then me taking it and it going further and everybody getting on the wrong side of that, you know? But in that scenario, all you have is the end of. But in that scenario, I feel like that's okay. It's not just that it's end of month, but end of month should result in 60K net buying. If I know how much buying it's going to result in, okay, that's all you need. I asked you about that before. Selling meta order can wipe out that buying and the delta would lag behind and not. Well, the delta does not lag. The delta is going to be coincident. Is that the correct word? You should see the delta affecting the price as it happens. I think that some people like to think of cumulative delta as a leading indicator. And maybe there are some situations where you can use it that way. But generally speaking, I would say that cumulative delta and price should move together. You have no idea how much of whatever is going to happen. If you did, you'd trade 1 day a month and 100% win rate. Well, maybe we should be doing that. I don't know. The problem is this is not a 60K net imbalance every month, unfortunately. But sometimes it is. Sometimes it is. And the thing is I don't look at it as it's the last day of the month. I'm reading the reports, right? I'm reading the reports and they say based on our models, there's X money to buy treasuries or whatever the deal is. Maybe I need to keep better records because I feel like that when I do get situations like that, like I think that the situations where what the flow is going to be beforehand is where it's really, really clear to me is pretty rare. But when I have that, my hit rate is very, very high. And I can remember some situations where we were in that situation and we saw lots of things on the tape that kind of were discouraging and it still pushed through. Yeah, none of what we're talking about pig iron is when you see a delta diverging from price. Right. Because my approach to that is if price and delta are diverging, that's a bad market for you and you just don't trade it. But what we're looking for is situations where price and delta are in line with each other and you get a strong trend in price. And or trying to predict when that's going to happen, right? So that's why I was saying, okay, had a big move up, and then we kind of came back. Cumulative delta was really high here. Let's make it more extreme. Cumulative delta really came up. Now it's kind of going sideways, but there's a little bit of buying there. There's a little bit of buying there. That to me is a good sign that it's going to do this. Doubly so if I think I know why it's doing it. Right? So, back to Uzi's scenario. I had a big meta order like this. It did this, essentially, right? I got big buying, then I got big selling, but this was only 10K. And I know that the net imbalance that we're supposed to have today is like 60K. Then that means that it's going to do this. So yeah, I will buy that one. But more broadly, how do you know the net imbalance you are supposed to have? So based on, I'm looking at, here is everything that I think will predict orders that day and add them together. And for each one of those things, I'm kind of gaming out in my mind how much of a net change in cumulative delta I think that they actually will be. So I think that this CPI, is probably a 30 to 60K change. But I also think this is PPI. Okay. I also think there is probably still about 30K passive flows. Right. So that leaves me with a 30K net imbalance. Right. The first big move that we had, now coming back over to here. First big move that we had was about 20K. And so it's natural for me to expect that there could be another 5 to 10K to come and that we could get a second leg. So I'm guessing, but there's a process. There's a process into how I guess, right? I'm estimating each of those flows. Yes. I do think that we could formalize it if we had access to enough data. We don't have enough data, but I think if we had access to enough data, I could really turn that into, like, the algorithm would make the prediction and stuff. Right? Okay. But so now there's another part here, which is that trapped traders does happen. Right? I'm just saying, I think that trapped traders is 5 to 10K at best. So, like, you know, in this situation right now, we breached highs, we came back here. Are there people trapped longs now? Are there trapped longs now and we got to sell? You know, that the using kind of the extension of what you were saying earlier. That's the kind of trade that I would expect somebody to make now is, well, there was all this buying up in here. All these guys are trapped, right? I think that it's a trivial amount compared to if there was a large meta order. Are you gonna make another video and wait, what about my car makes it look like it's an Uber? Other than does the headrest look dirty? The headrest is dirty. Does that show in the video? Wait, let's go back. I'm in the passengers? No, I'm not. No, I'm not. Oh, okay. Yeah. You think that I'm in the passenger side because TikTok flips the, because I'm using the front facing camera, TikTok flips it around. Your car is so clean, Al. It's not actually that clean. It's funny because you can't see it, but like the headrest has, and I got it like this, and I don't really know what it was. I really don't know what it is or how to get rid of it, but there's like a black spot right where your head goes. Dude, this car, it is a, what was it? A 2008 or is it 2009? It's a 2008 Acura TL is what it is. And it is starting to show its age. Like the suspension on it is just completely shot. So you, like, every little bump is kind of exaggerated. How are you bald but still get grease stains on the headrest? Is it just a grease stain? I don't know. Because the thing is the leather still feels fine. I don't, like, when I put my head on it, I'm not like, oh, that's gross. I've tried cleaning it. It's there. It was there for when I bought it from the previous owner. And he told me what it was, but I don't remember. I don't remember what it was. But he was like, don't worry about it. It's not a big deal. I'm like, okay, whatever. Might be a problem if I ever try and sell the car, but I'm going to run it into the ground, so it doesn't matter. I think it's funny though that I banged a chick here once. Oh man. So the guy that owned it before me, he was doing sales of some sort. He was doing tech sales of some sort, and so he really drove it. Like it had a decent amount of miles on it, but like they were all highway miles. So it was actually a really good deal for me. But especially when you consider that I've now had it since I want to say that it was like 2014-ish that I got it. 2013, 2014. Oh, I do need to go to work. Holy crap. I've totally lost track of time. Anyways, it's not that nice of a car. It's not that clean of a car. And I am in the driver's seat. It's just TikTok flips things around. You tried telling me. I'm sorry. Yeah, I should get going, guys. I'm still in an okay spot, but I really need to go now. So we could continue this tomorrow.